Hello, everyone. I hope that you guys have had a wonderful week so far, right? As you guys realize, since lately we have been, pinpoint, you know, accurate with our analysis, right? Which is the main thing that we're trying to do, right? That's the main thing, okay? Good analysis leads to good trades. Good analysis leads to easy trades, right? So, yes. So as I said previously, we'll be doing a short Q&A right now. First question is, hello, there are two questions. I have noticed a cracking correlation when two assets of a triad make a new high or low of the cycle and one doesn't. Also, if one makes a new high or low and two fail, even though there isn't sequential SMT, there seems to be a strong reaction. Is this something to watch out for, or just coincidence? It is something to watch out for, right? SMT, cracking correlations, right? It breeds reversals, right? So even when there is no sequential SMT, but there is SMT, you will have a reaction, but that reaction will not usually, encourage price to react for a long period of time. It will usually just be a pullback, right? But if you're looking at the higher time frame cycles and you have a pullback, for example, on the 4 hour time frame, or the daily time frame, then that would be something that you should consider, because you're not trying to just trade on hold forever, right? You're trying to get in, get your piece of the cake, your piece of the pie, and just get out. It's as simple as that, right? You will have the tools that you need. Of course, just as how we talked about something new the last time, time before that, right? Those things, right, are just for, the people that haven't found their modelers yet, right? If you have found your modelers yet, if you have found your model already, which we all know what the easiest model is, right? Right? Sequential SMT plus a precision swing point, right? And this is something that you should pay attention to that I'm going to say right now. When you have this form, for example, across the 4 hour time frame, when you're focusing on the monthly cycle, which is comprised of weeks, I'm pretty sure that you know that, right? It will be around, I'll say, 87% accurate, right? It's just insane to see. And there are times you don't even need a precision swing point, right? You just go in, and that's the time that you go in and you look at your lower time frame to 1 hour, the 50-minute time frame, and then you just look for a entry point, right? Whenever that happens, you see the sequential SMT across, the 4 hour time frame while looking at the monthly cycle. What do? You go in, you have two, chances per se. The first one, if it fails, you can go again. If you fail again, you just stop and you wait for the next sequence of SMT. You're managing your risk, you'll be okay, right? The reason why I mentioned using the monthly cycle is if you're using the monthly cycle and then you have a lower time frame sequence of SMT form within that higher time frame sequence of SMT, you've struck gold, right? And this goes for the same thing, the lower time frames, right? It goes for a lower time frame, but this specific cracking correlation, linked with that specific time and that specific cycle, it's basically, what moves the markets around, most of the times. And it's, in my opinion, the best thing to look at, right? If you're a person that likes, intra-week trades or, swing trades. The $1 million setup, my friend, right? We've talked about it many, many times, but, most people don't pay attention to it. The other questions, I've noticed if a precision swing point is in a fair value gap, there is usually a good reaction. Do you use this? This is a very good question. Do you use this for further confidence when you trade? Yes, right? Whenever you see that happen, a precision swing point, right? First of all, if it was just even a swing point alone that forms within a fair value gap, that alone would give you a reason to take a trade. But once you have a precision swing point that forms within a fair value gap, it's over, it's done. But you have to understand these things are algorithmic, which is why it just keeps happening over and over and over again. right? It just keeps repeating itself. It's always there. Do you realize that it's always there? It may seem easy to you right now, but do you remember 5 months ago? Do you remember 7 months ago? It's hard to see, right? You couldn't see it unless I show it to you, but now you can. You can see it. It's there. You know what price is going to do. Most of the times you do, right? Most of the times you do, for sure, right? And, you need to always take these things into consideration, right? Everything that we talk about, sequential SMT, precision swing point, precision candles, right? Mirror premium and discount, right? And the way how you apply T2 and T3, the way you apply T1 and T2 to that is you need to have the cracking correlation land on the projection or the standard deviation, right? That's how you do it. So yes, and now we have, okay, that has nothing to do with trading, so we're going to skip that one. What do you have in store for next year? Well, most of you will be here next year because, it'll be lifetime, so you will see. There's a lot, right? Next year will be, like you can see right now that, we are accurate, right? But next year will be another level because this year was, in fact, difficult, right? And it was programmed to be difficult. It's supposed to be difficult, which it is, but next year will be easy, right? Have you tracked the average length of time for each type of sequence SMT? The form SMT, fill, targets, etc., etc. Yes, I have. If we can anticipate higher probability days based on the economic calendar, and considering that time is fractal, how can we identify higher probability quarters on both lower and higher time frames? So, yes, time is fractal, and this is a very deep question. This is not something that you can just, answer here with a few words, right? Just as how you have certain, assets or, certain news events for a certain asset class, for example, the USD, right? For example, you have a specific news event, second quarter of each month, which is CPI, right? That same news event that you have there, right? It's just a smoke screen, of course, right? But just due to the fact that it's easy to see, and it would be easy to recognize that, okay, we have this happening over and over, right? If there was no news, it would be like, why, it would be easy to pick up on that. Why is this happening, right? That's what it would be. Same thing happens, London session, right? At the specific time that would be, translated down to the lower time frame cycles. And that's something that we will eventually talk about. But right now, we cannot give all of that information, right, just by answering these questions, but you're correct. But if you're smart, you can still, go in and dig and find what you're looking for. Does sequential SMT have an expiration, like taking out the previous Q's high or low? It only expires when you have another critical correlation in the opposite direction of, that the order flow has been placed in by the sequential SMT that you're referring to. Can you please explain a bit more in depth in which condition we can skip a cycle when looking for a sequential SMT, right? You just want to skip, times when there is no cracking correlation, right? Whenever there is sequential SMT, it's there for a reason. Price will react, right? And what causes price to react more is when you have a news event that falls within the quarter that the sequential SMT, was instigated or created or, just brought to life by price itself. Do you use sequential SMT plus precision swing point? Must the precision swing point be on the same time frame or when it's on the same time frame, right, it's more reactive. When it's on the same time frame, it's higher probability, but it does not need to be on the same time frame. It could be on at least 2 time frames lower. Now you already know how we measure our time frames, right? It is the 1 minute, then the 5, then the 15, then the 1 hour, then the 4 hour, then the daily time frame. In that way, whenever you see me use the 6 hour time frame or the 8 hour time frame, it's for a reason outside of that, right? So I believe that that's enough information for now. That's enough questions that have been covered, and we'll just go into the lecture. So yes, everyone, you can see that, first of all, this week has been a amazing week thus far. The high and low of the week for most asset classes was caused by sequential SMT as usual. It's actually insane, right? It just happens over and over, right? The only way that you cannot understand this, my friends, is just that if you don't believe it, right? And if you believe it and you see this thing happening over and over, it's not even that you just believe it, you just know that it works because it just keeps happening, right? When you have people talking about this and that, right? You have to have this time frame gap and this time frame low and this specific gap and this propulsion block, or whatever it is, whatever new P theory that's being brought out there that just doesn't make any sense. Just doesn't make any sense. You can't use that without having a proper idea of where price will go. P theories are nonsense, right? When price cracks, that's when it turns around. And that's all that there is to it. It's not difficult to understand. You know the bones already, right? You know everything about price, like how every entry point, all of that stuff. No, all you need to be focusing on is, how do I know when price is ready to turn around? You already know. It's just that sometimes it will work, sometimes it won't. And then the time that it doesn't work, you probably over risk, and then, or you just don't use a stop loss, and then you end up just losing the trade, right? So that's just going to be a you problem until you fix that, right? You're almost there if you haven't, struck gold as yet. So yes, the economic calendar, I'm pretty sure that you guys are, pretty familiar with this. Tomorrow, right, which is Friday, we have NFP. So we can expect some volatility. And, next week, as you guys already know, is the week that we've been waiting for this entire year. I've been waiting for this week since like 2021, to be honest, right? So yeah, we have next week, which is what I'm looking at right now, right? November 5th, we have the presidential elections. I strongly suggest that, for example, Monday, you do nothing, right? And you can see that we have daylight savings time shift right before. Daylight saving time shift right before. It's just so random, isn't it? That this specific thing just happens right before the presidential elections, the same week. It's amazing, man. Okay. It's amazing, man, that everything is controlled by this thing. This, some may call it an algorithm. Some may say it's just the nature of price. Some even blame it on the psychology of us. Some people blame it on the moon. Not me though, but some people, right? But it's just that, there's always these coincidences that just pop up. So anyways, yes, on November 5, that's the day that we'll be looking for. We will not be trading on November 5. We will not have a live Monday. We will not have a live Tuesday either, right? We will have a live Wednesday and Friday of next week. So we're talking about that from now, right? So no one gets crushed, right? So that no one gets tricked into taking a trade. There will be trades, but the fact is that if you're trading these types of news events with live funds, the spread will just open and you'll just get stopped out or just liquidated, or your stop just will not work, right? So it's always a smart idea to just do nothing, during this time. So Monday, nothing. Tuesday, nothing. Wednesday, look at what happened, and then you have the next 3 years of clean price action to trade. So yes, here we see that we have this credit correlation right here already, right? Don't close candle, dollar index, don't close candle, great British pound, right? These are signs of low probability conditions to come, right? And also the fact that the euro fell more than the British pound, price has to do something to, recalibrate these assets to, be similar in terms of the length of the fall, right? Obviously here, liquidity, very obvious. Looking at the euro, lots of liquidity right here as well. We have the sequential SMT here, right? So our mind is not changing, in regards to the direction of that we expect these assets to go into, right? Here you can see that we had SMT here, right? Here, SMT. Here we have and we talked about this, right? We have the S&P 500 failed to break above this high. And even though it failed to break above this high here, that was just a regular SMT. That was not sequential. The sequential SMT occurred here, right? This was the sequential SMT between here and here, which we'll look at in the other, chart, on the other chart. We talked about expecting a cutting correlation, right? Which occurred here. Was beautiful. Strong liquidity, these lows, and right here. The main thing, what happened? First of all, we had the first correlation was this candle right here, right? So this was a precision candle. Then this candle was a precision candle again. So we had two precision candles right here, right? And whenever you see these things happen, the only thing left to happen after that is what? Sequential SMT, right? We got that sequential SMT, then we had price just fall. Here you can see a clear depiction of what happened, and this totally follows what we usually look for, right? Which is what we usually expect Q4 to reverse, right? And this is what happened, right? So here, sequential SMT, very obvious to see, right? So here we have price failed to break above, it would actually be here, but it doesn't really matter, right? Price failed to break above the high of Q3, right? And remember that there was a precision candle right here on the higher time frame, but the main thing right here is that there is sequential SMT, right? And listen, it's this simple, right? And I don't know if ICT knows this. I don't know if he knows about this. I don't know if he hides it. But you cannot, my friends, you can't just, put away the fact that, okay, I talked about this before it happened. We do it multiple times. Multiple times. Right? And it just keeps happening. You have this information. I expect you to use it. Become better than me, more successful, whatever it is. Do whatever you need to do. If you haven't started to make money yet, you need to find a way to just milk money using the skill. Right? So yes, here, failure swing, S&P 500, NASDAQ again, which is usually the cleanest asset, right? And here we have the NASDAQ being the cleanest asset. The cleanest asset for the FX strat will usually be the euro, right? So here, NASDAQ traded about this high, right? Then credit correlation occurred. Listen, there is nothing here. There's no level here that is there to cause price to reverse. The only thing here that causes price to reverse is time. And listen, we've been doing this when price goes to all-time highs all the time. All the time. Every time it happens. There is nothing there. So imagine when price actually falls, which we expect it to do. It's contained within a higher time frame range, and you have your monthly time frame sequential SMT, monthly cycle sequential SMT, weekly cycle sequential SMT. You have clean price action, obvious breakers, obvious fair value gaps. Because here, it's not obvious. For example, here, S&P 500, there's no obvious gaps here for price to return to. You just have to go off of the sequential SMT, right? So here we have price being drawn to the lows that we talked about. Same thing for the NASDAQ. And here we have the Dow just doing what it feels to do, right? No problem with that. These are the assets that we focus on. And how much points, look how much points this dropped. This is what, come on, man. Like, to be honest, it's not to be cocky or anything. Like, there's nothing that's better. There's nothing that works better than this. Like ICT doesn't have anything in its YouTube channel that you can just plug into price just like this, and then it's like, oh, it's just this easy. I don't have to study it for 5 years. I don't have to study it for 4 years. I don't need 3 years. It's just this easy. It's common sense. Once I tell you what to look for, you go into price, you look for it, you understand quarterly theory, which is the base. You understand that time is fractal. You understand SMT. You plug it into quarterly theory. Okay, now then what do? You add a precision swing point. It's done. You can just be trading like right after the candle, right after the precision swing point like that. Literally, right? And here again, right, looking at Bitcoin, we can see that there hasn't been much movement, but we had sequential SMT here, which is why we had price just pull back within the range a bit. Right. Obviously, we expect more movement to the downside, right? But I would expect price to take this high first, and just not take this one out, which would create, you already know, sequential SMT. So I hope that you found this useful. We will be back next week, the day after the 5th, which is the presidential elections. Don't overtrade. Right, there will be times coming that will be so easy that you just can't miss it. Right, easier than the beginning and the middle of the year was. Way easier than that. With that being said, I hope that you have a wonderful week.